Hi everyone, this is a technical analysis on EURUSD. Let's start with some fundamental background first. In the US, the Fed left interest rates unchanged as expected at the last meeting, with basically no change to the statement. The dot plot still showed three rate cuts for 2024, and the economic projections were upgraded with growth and inflation higher and the unemployment rate lower. The US CPI beat expectations for the third consecutive month, while the US PPI came in line with forecasts. The US NFP beat the expectations across the board, although the average hourly earnings came in line with forecasts. The US PMIs missed expectations in April, with the commentary citing lower inflationary pressures but also increased layoffs. The US retail sales beat expectations across the board by a big margin, with positive revisions to the prior figures. The market expects the first rate cut in September. In Europe, the ECB left interest rates unchanged as expected at the last meeting and opened the door for a rate cut in June. The recent Eurozone CPI missed expectations. The labor market remains historically tight, with the unemployment rate hovering at record lows. The latest Eurozone PMIs beat expectations on the services side, while the manufacturing one missed, dropping further into contraction. The market expects the ECB to cut rates in June. Now, in the daily chart, we can see that Euro USD eventually pulled back to retest the 107 resistance zone, where we can find the confluence of the 38.2% Fibonacci retracement level and the red 21 moving average. This is where we can expect the sellers to step in with a defined risk above the resistance to position for a drop into new lows. The buyers, on the other hand, will want to see the price breaking higher to increase the bullish bets into this trend line around the 108 handle. On the 4-hour chart, we can see that the recent price action formed a bearish flag, although the price will need to break below this bottom trend line to confirm it. This should strengthen the resistance zone here, as we have also the top trend line adding extra confluence. The sellers will look for a drop into the bottom trend line, targeting a break below it, while the buyers will want to see a breakout to the upside to invalidate the bearish setup and position for a rally into the 108 handle. On the 1-hour chart, we can see more closely the recent price action, and we can notice that we have another important zone here around the 106.90 level, where the price found both a resistance on the way up and a support on the way down. Moreover, there's also this red 21 moving average acting as dynamic support. This is where the buyers might want to step in with a defined risk below this level to position for a rally into the 108 handle. The sellers, on the other hand, will want to see the price breaking lower to increase the bearish bets into this bottom trend line around the 106.40 level. Tomorrow, we will see the latest US jobless claims figures, while on Friday, we conclude the week with the US PCE report.